Hey, buddy.
Hey, what's up?
It's Friday, Friday, Friday. Remember that song Friday from Rebecca Black?
No,
It
I
was
do
really,
not.
it was really catchy. I apologize. Actually, I found a way. If you ever have like a song stuck in your head, if you sing "Mana" by the Muppets, it will undo that. It's weird. It's a really weird thing. They've actually
But,
done science. They've done like scientific studies on this.
but then won't that get stuck in your head?
No, it doesn't. It's weird because Mana doesn't get stuck. It's a weird thing. Here, I'll prove this to you, right? Feliz Navidad. All right, now you got that in your head, right?
Uh,
Been a near.
Level up your email domain security and deliverability. Reduce business email compromise and reel in that pesky email phishing. Make DMARC a new revenue stream for your MSP. Becoming a managed service provider partner with EasyDMARC is a great opportunity for your business to boost sales and decrease risk. Your customers need DMARC. Your job is to let them know that their email domain might be at risk. Find out more today at atmsp.link/EasyDMARC. That's atmsp.link/EasyDMARC. We are thrilled to announce that Sync 365 is officially the newest All Things MSP vendor partner. If you're an MSP, you know the pain of manual billing. It's time to stop losing money on unbilled licenses and get out of Excel hell. Sync 365 automates your Microsoft 365, Azure, and third-party license billing directly into your PSA. It connects seamlessly with ConnectWise, Autotask, and Halo PSA to ensure your invoices are accurate every single month. Stop leaking revenue, start syncing it. Check them out today at sync365license.com. That's sync365license.com.
What's up, everybody? Welcome to the All Things MSP podcast. I'm your host, Justin Esgar, and with me always, the man that didn't grow the beard. He prompted Sora to generate a rugged but forgot to trim look, Mr. Eric Anthony.
Yeah, thanks. And by the way, there will be a poll coming out soon to decide what stage the beard should be in its next iteration.
Yeah, that's definitely what the people want right now.
But if you were here for the cold open, you know that Justin just played a very cruel and unusual joke on me, and so now I have Feliz Navidad stuck in my head.
Now it's gone.
Didn't work.
It did. None of that is what we're talking about today.
No, it's not.
Well, today we started talking a couple shows ago at this point about like money. Well, we always talk about money, right? But we talked about pricing models. That was it.
Right.
And we had this thing, and then our good friend Craig Willard did a reaction video, which I sat and watched, which was very weird for me. Just, I know you're listening, Craig, but it was super weird for me to watch a video of me. Like, I feel like I need to spin a top and make sure that this is my reality.
Well, and what it made me realize is how little I actually talk in these podcasts.
That's what the people want, Eric. I'm kidding.
Should we do a poll on that?
I think it'd be more exciting than the poll of what beard you should have.
That's probably true.
We might as well at this point just put out a poll like, how do you take your hot dogs? I watched a
Mustard
TikTok
and
video.
relish.
I had to watch a TikTok video of it, like this Japanese woman like eating. She literally ate like 8 hot dogs, like based on the way the country makes them. So like Americans were like ketchup and mustard, and like the French, she just took the hot dog and like dipped the whole thing in a thing of like Miracle Whip and like ate it. And I was like, this is weird.
I don't know if that's like like they do French fries, but that's really a Danish thing, a Dutch thing, where they do their French fries with mayonnaise.
I like mayonnaise on my French
which
fries.
is actually not bad, by the way.
It's not that bad. Yeah, little Kewpie, little ketchup. It's like Russian dressing. It's not what we're talking about. Why do we keep doing this to ourselves?
I don't know, but they keep listening anyway. So
we do love you for that. Let's talk about what I do. So we talked about, like I said, we were talking about pricing models, and then Craig Willard did the reaction video, and something that came over Eric and I was the fact that pricing models matter, sure, but more importantly, like profit matters, right? That's why there are so many
Yes.
books about profit and not pricing. I mean, there are plenty of books on pricing, but I think if I went to the store, you could buy books at stores anymore.
You
Uh,
can actually,
yeah,
but I haven't bought a book in a store. I have bought Legos in a store, in a bookstore lately, but that's a whole different story. And we're digressing. But one of my favorite quotes about this whole profit thing
yeah,
is that you can grow to say 2 million in revenue and still be broke. And that's what we want to save these people from.
yeah. We want you to grow to 2 million. We don't want you to be broke. And Eric and I want you to cut in on 10% of all the profits because you're learning everything you need to learn from us right now. We're like your MSP agents. Um, here's the number one thing, right? Because again, going back to the pricing model component of the things is it's really easy to just come up with a price. It's really easy to just like be like, we're going to charge $100 or $125, but like you forget about your costs. And we talked a little bit last time when we talked about pricing models, like the cost of the services that you're offering. Like you have to your COGS. You have to think about like how much per endpoint cost in your management software, or like whatever it is. But you also have to take into consideration things like your labor costs. And a lot of us, present company included, don't measure that accurately enough.
Well, and part of that is because a lot of times it's not the easiest thing to calculate, right? Because you have multiple people at multiple rates and it can become difficult
Mm-hmm.
because it's kind of one of those weebly wobbly timey wimey things.
Right, because if your level one tech is getting 30, 40, $50,000 and your level three tech is getting 90, 100, $110,000, how do you calculate the rate based on what you're going to charge the customer, right? So the answer that like we're working through this problem. This is the reason we're talking about this also is partially like Eric came to me with this idea and I really want to talk about it because Virtua is working through this is like we have to figure out the average per hour cost of our labor, right? So if I have someone
Right.
who's making 40 and I got someone who's making 100, the average cost between those two is 70,000 for the year divided by 52 weeks divided by 40, whatever that is, right?
Right.
I'll do some live math. 70,000 divided by, I'll say 50 weeks because 2 weeks off, that's 1,400 divided by 40 is $35 an hour.
For the straight labor cost.
Straight labor cost average, right?
We're not
Now,
talking about fully burdened, which is another piece of this that you need to calculate.
right. So now, because we've talked about MSP, PC MSPs being like the race at the bottom, the commoditization of IT help desk, right? Because I
For
remember
some
I
of them.
told it for some of them, yeah, not for everybody. But like I remember, I think I told this story. Like I was at a BNI meeting one time when had just started out. So this is what 2008, 2009 ish, and I was there when the IT guy who was part of that group. I was guesting. And there was an IT guy part of that group, and he was doing his presentation. So if anyone who doesn't know or didn't hear this episode, BNI is this international networking group. They have one person from every industry, they only allow one person of any industry to be there. So there's only one mortgage broker. There's only one insurance person, whatever. I seem to slip by whenever there's an IT person because I always go, well, they do PCs, we do Macs, we don't do the same thing. But I was guesting for somebody and everyone does they do a round table, like you get a 30-second elevator pitch. And then usually one member of the group does a 20 to 30 minute longer explanation of what they do. So that way everyone else in the group gets to know what they do and then they can go send them referrals. Cool. All right. Now we all know what BNI is. I happen to have been there the day the PCMSP guy or the PCIT guy was doing the 30-minute spiel. I didn't know this when I got there. So I go and I say, hi, my name is Justin. I run Virtual Computers. We're an Apple consultancy shop, and we take care of everyone, right? We take care of your mom, and we take care of your dad, and we take care of your dad's office, and we take care of the owner, and we take care of like everyone. We'll do anything. Cool. That was my pitch. Whatever. PCMSP guy gets up and he starts talking about what they do, and then he comes into how much they charge, and he's like, Justin, how much do you charge per machine? And I was like, I don't know, like $125 a machine. He's like, that's crazy, we charge $60 a machine. At which point, side note, I was like, screw you, dude, and I left, and I emailed the people who ran the group being like, that's how you treat your attendees. But my point of this whole story is, if he was legit charging $60 a device, there's no way that guy's still in business.
I mean, he would have been fine with $1995.
It's weird how you said that. You meant that $65 a device in 1995 would have been good, not $19.95.
No. Yeah. Sorry for the confusion there. But yes, yeah. 1995, the year, yeah. 31 years ago, $65 would have been okay per device.
Right.
Absolutely not okay today.
But even in 2008, not okay, because he's definitely not taking into calculation his head, because he was talking about how big his staff is, we have all these people and blah, 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 blah. I'm like, dude, I'm one person at the time. I was like one person. And you're what are you doing? So the reason I'm telling this stupid anecdote is that the race to the bottom for pricing doesn't work, because you end up underpricing your entire book, right? Because you're not taking into consideration the cost of all your software and your labor costs. Well, what we say in the industry, plus, right? You need overages, you need taxes, you need 401k deposits, you need, in case somebody gets sick, like you need the plus is all those little,
all the stuff that adds up to their fully burdened labor rate.
Exactly. Right. So like, this is the second time. What if someone's getting X amount of dollars? Let's say an employee is getting $50,000 a year. Is that their, because you said this, the fully burdened labor rate?
Right. I knew you were going to ask me this question, and I think it's about 25% is the number you add.
It's 25% over, right?
It's 25% over their salary. Correct.
Right. Which means, like, even though you're only paying them $50,000, they're doing 25% over is 13. They're doing $63,000 a year of work is basically what you're saying, because they're pushing the envelope across the board. And like, so yeah, I get where you're going with that.
Yeah. 25 to 40% is what Mr. Chat GPT just gave me.
Mr. GPT to you.
And so, you got to figure out kind of where yours is. For office/professional personnel, they actually say that it's about 12 to 35%. When I'm doing this, I usually try and go on the high side, and this is going to include the things that you have to pay for, like your side of Social Security and FICA, right? Your side of any insurance, health insurance or, dental insurance, those kinds of things that the employee benefits from and you pay for, that's not included or not taken out of their salary. Now, obviously, income tax is taken out of their salary, so that's in there.
But if you do 401k match, for example,
yes,
right, that's not part of their salary. That's the plus.
Yeah,
I guess the plus and the burden is kind of the same. At the end of the day, it's almost the same. But you have to really take those things into consideration. And what happens, we see a lot in this industry. And I'm saying we, because look, Eric and I have been around a long time. We've seen it all. We know, we've talked to many of you. We want to talk to more. Check us out, atmsp.link. I'm sure there's something there.
/contact.
/contact. That was close. So many conversations have come up about giving discounts or based on pricing, right? Like, should I give a discount because they're an organization I like, right? Like, nonprofits are the best example here, because everybody always wants to give discounts to nonprofits just because of the fact that they're a nonprofit. Yeah, nonprofits aren't the greatest, but like, there are nonprofits out there that make hundreds of millions of dollars.
Right. Well, I actually have my personal solution for this. Like always, Justin and I will never push a best practice on you, right? We will give you our recommendations. We will tell you what has worked for us. And that's what I'm going to do in this case. Um, when it comes to discounting of any type and your MSP, what I would say is you need to figure out what your minimum profit margin is, and then you add what you expect to maybe discount on top of that. So say I want to give a 10% discount for a 1-year contract, maybe a 15% discount for a 2-year contract, 20% discount for a 3-year contract. I'm going to take whatever my minimum profit margin is and add 20% on top of that for my regular price.
Mm-hmm.
And then if they want a 1-year contract, I'll discount it by 10%. No problem.
You're doing the Amazon Prime Day deal math is basically what you're doing.
No, what I'm doing is I'm setting my minimum and I'm holding to it. That's really what I'm doing.
Right.
I'm making sure that I never go below my minimum acceptable profit margin for my business.
Which is COGS plus your burden labor plus what you want to make in profit.
Plus overhead.
We
haven't included overhead yet.
Right. So anyone who's selling at $65 a unit right now and has any semblance of a team, you're losing money hand over fist. I'm surprised your accountant hasn't come and like slapped you in the face.
Yes and no. So there's one way that you can do that and you're not, and that is not including labor. Like if the $65 only includes tools and some automated
I was making the assumption that the $65 in labor included all you can eat.
Right. I just feel like we need to spell it out so that nobody gets
ALL space YOU. Get it? Be here all day, folks, because this is my office. Anyway, so I was making the assumption that the 65 was including all you can eat. Yes, if 65 is just your tooling, then that's different because that's not including your labor or your overhead profit,
which is going to be your highest cost.
Which is why I'm saying, like, anyone paying it, that's what I'm saying, $65 is enough. Like, if you have a tech that's $85,000 a year, a good tech, tier 2, tier 3, $85,000, pretty good pricing, right? That's alone $53 an hour ish. So if you're giving away the farm at 65, and even if you have one tech, not including you, the owner, if you have one other tech, one employee, and they're making $85,000, and that means they're paying, and they're doing all the work basically, they're $53 an hour plus your tooling. If you're giving away the farm for $65, you can't make money.
No, you're losing money at that point because you haven't even calculated your overhead or owner salary into that piece.
Exactly. So there's a problem with how that works. At this point, if you have one tech, I think, honestly, the minimum threshold, and I'm doing this just top of head math, is $100 to $125 a machine, which would give you that, and that includes giving you profit.
Right. And you have to be careful with that because even with that, I don't think you can do all you can eat. I think you have to have some type of scope around that to control the labor costs, because if you get a client that tries to take advantage of it, you could run over and end up with no profit for even that amount.
You should have in your contract like a don't be an a-hole clause. Somebody I knew used to call it the Will Wheaton clause. I don't know why, but we call it the don't be an a-hole clause.
Well, and we're getting off topic here a little bit, but when it comes to scope, there's a scope that you control by being proactive and making sure that things are under control, that you're not giving people admin permissions on their own machines, which is a whole separate topic. But then there's the things that they could get out of hand with that you have no control over. That's where you kind of make sure you got to make sure that you're not allowing scope creep when it comes to those things.
No, but that's what I'm talking about. That's the don't be an the don't be an a-hole clause is like, we're going to give you all you can eat with the expectation that you're not calling us every day for every, like, you're not calling us every day with something new, right? Like, I've had conversations with customers where I've said, like, listen, it's an all you can eat plan. You have unlimited support. Our lawyers want to say 100 hours a month because lawyers be lawyers. But if you're calling me every day with something different, we're going to have a conversation. And in 18 years in business, I've had that conversation once with somebody. Right. So like that's what I mean by that. It's because you have to protect yourself, is what you're saying. Is like, you have to protect yourself. Otherwise you're never going to make any money because you're going to be spending all that time with this one customer and you're blowing it. Profit, for those who don't understand, is money you make not doing anything. Basically. Right?
I
get
wouldn't
paid your
categorize
salary
it that way.
You get paid your salary, okay? That's how much money you make for doing things. Profit is everything on top of that, in my mind, for the sake of this argument.
It's also the fuel for growth.
That's not a and or. That's a yes. That's a yes and. Right?
Yes. I just wanted to add it in there.
Right, because you need that money in order to be able to grow the business, do more marketing, hire another person. Look, I know we all love to work, but eventually the real goal of any entrepreneur is to like have a self-sustaining business where you don't have to be in the day-to-day, right? That's why we always say work on, not in. Like, get to a point where you're not like you want to get to a point where you need to work because you want to work. Right.
Well,
like,
yeah. And, the point here is that for a lot of MSPs, they're looking at this as eventually to sell, right? Because as much as, a lot of us would like to say that, oh, our kids will take it over. That's probably not a reality.
I do not want
for
my
most
kids taking
people.
over my business.
And some of us just want to sell it to be able to retire. Right.
Mm.
So the key there is you have to be able to be ready to sell it. And unless you can separate yourself from the business, you have a job instead of a business.
Right.
And that's something that a lot of people...
it's a job, but like I said, as a job, you get paid for your hours of work. If you want to run a business, you need to have profit, but that's the money you're making by like not working, is what I was saying. Like, what you use that money for, whether that's growth or whatever, is the second part of it, but that's what that profit is.
It's kind of like the difference between a job and an investment, right?
Yeah, exactly.
Yeah.
Which means you have to be able to price appropriately to include this profit buffer. So here's what I want everyone to do right now. And if you're driving, pause and pick this up when you're in front of your computer. Is I want you to open up a web portal to your accounting software. Most are probably using QuickBooks Online. Some of you probably use Xero. None of them are sponsors. Call us. But go in and run a profit and loss statement for 2025. We're recording this in 2026. So if you're listening to this like way in the future, or somehow or other got a time machine and you're listening to this way in the past, this might not make any sense. But run a profit and loss statement, we'll call it P&L, for 2025. And at the bottom of the whole thing, it's going to say net profit. And if that number is distasteful to you, raise your prices.
Well, and especially
your accountant loves it.
In front of it.
Hold on. Your accountant loves it because that means you pay less in taxes. And I get that. I'm not saying that. But if that number is too low, you need to work on that. And that's what we're getting at. Like, you need to increase the buffer. You need to increase the room. You need to increase the profit on all of these things that you're selling. Because like, we all sell Microsoft licenses, right? Like, what's the profit on a Microsoft license? Like $1.20.
Not enough.
But my point is that like, there's not, We don't sell no one I know in the industry is like, you know where I make all my money? In 365. Like, no, you don't, right? No
Well,
one's just a Microsoft broker, except for
yeah,
PAX
and
8.
that's a good thing to bring up, right? Because I'm actually glad you brought it up, because people go, well, then why should I sell it? Well, because you're not selling it to make the profit off the license sale. You're selling it to make the profit off the labor to manage it.
Correct.
And that should be a separate part of your fee.
If it's not already looped in, yeah.
Right.
You can definitely, if you want to break those, because what we talked about last time, we broke up a lot of stuff, and it depends on what your culture is at your business. But you can break out a line item for Microsoft 365 tenant management, $100 a month. That's all profit, especially if they don't hire or fire anyone or need any password resets for the month.
Or you could sell it as a managed Microsoft E5 license.
Right. And then up the price on that too.
Right. And
I
then
still don't understand why Microsoft still believes that 100 gigabytes is more than enough space for anyone's email, because everyone I know who uses Microsoft sends so many PowerPoint presentations in their email. And I know that's not what you're supposed to do, but I can't stop. And they BCC themselves on every email, so it's always in their inbox. And now they're doubling down on how much stuff they have in their mailbox.
I'm going to hold my tongue on this one.
It's not I don't control it. It's their culture, man.
I know.
But yeah, like that. And the other reason you sell it, not just to sell the managed component of it, is that it makes you a one-stop shop, which makes your customers feel more desirable. They're more desired to keep working with you on things, right? That's a sticky point. The Microsoft 365 license. Those are sticky points. Those are ways to keep a client sticky to a degree. So you're not making profit on that. So where's your profit coming from? Your profit's coming from your labor, from doing the work. But again, like we said in the beginning, you need to buffer that. If you're going to spend $53 per hour on an employee and you're charging $75 an hour for labor costs, you're not making enough. Even at that, right? Let's say because people do time and material still now, right? Like
they do.
They're charging per hour, right?
Because there are customers who still want it. Fair.
50 at 73 at $75 on a $53 employee, you're making $22.
Well, gross, not
gross. Right. Then take that 22 and take out their taxes, their health insurance, their 401k benefits, and now you're negative 12.
Yeah, and you haven't even accommodated for overhead and your salary.
Right. So that's what I'm saying. Like, people aren't thinking all the way through the equation. People are just making up numbers because that's what everyone else does, right? I think the big thing is, I've had this question a lot. A lot of people go like, how much you guys charge like in your area? And everyone's like, oh, we don't talk about pricing. But you can get a gist of like whatever. Like in New York, 200 to 250 an hour is pretty standard, but that doesn't work in Iowa or Missouri or Idaho or whatever. It should, but like I have friends in LA that they like their pricing is all over the place, anywhere between $100 and $300 an hour.
Yeah,
because of their costs, not because everyone else is doing, but everyone wants to do whatever everyone else is doing. Is my point. Like everyone wants to be the average.
Yeah, I can see where you're coming from. And, I think the point that we've made is you need to know what these numbers are. Because if you don't know what these numbers are, and I have a feeling a lot of MSPs don't keep track of it like they should. They don't run a profit and loss like you suggested often enough, which honestly, you should run it, I would say, once a month. You should also be looking at least quarterly at the individual profit margins on individual clients, because you need to know which clients are not hitting your minimum acceptable profit margin, your MAPM. I just came up with that. I think we're going to use it from here on out.
Map them. Figure out how much time you're spending at a client, divide that by the dollar amount you're charging them for the month. And there's your math. It's not hard math. This is like third grade math to figure out where your per hour cost is. We did that a while ago. We had a client who we thought was really good. Like we loved this client and we did the map them, and their hourly was lower than almost every other client we had in our book at the time. And we were like, wow, the reason we loved them so much is they were always communicating with us and they were always
Right.
talking to us and we were always doing this. No. They were always submitting tickets, right? They always had
Yeah.
problems with something. And we were so friendly with them that we didn't even notice this, right? And
So
so
if
I have a client, sorry, it's like 300 an hour based on what their month was. And then these guys were like $58 an hour. And I was like, well, we're
yeah,
going to fix that.
that's the problem. So I want to switch gears a little bit and talk about some of the kind of warning signs, some of the common killers that can eat into your profit margin. And I know you probably have some ideas. I will go first and say discounting to win deals is probably one of the biggest
Let's
ones and
talk about
most
that.
common ones. And
Yeah.
that's why I brought up what I did earlier about setting your minimum acceptable profit margin and adding on top of that so that you can discount later.
Yeah. The discounting thing, you should never negotiate against yourself for pricing.
Right.
You should never discount unless there's a particular reason or if you have already calculated in above and beyond what your minimum profit should be. I think that's a big one. You know, we talk a lot about the difference between hourly versus all you can eat and like does all you can eat work. And I said earlier, like, you know, you have to have the don't be an a-hole clause in your contract for the hourly for the unlimited. Brad Gross will never like let you write an unlimited clause. You're supposed to write in exactly what they're getting.
Right.
But I guarantee you that none of us do. But you got to keep an eye on that because that can be a runaway train if you're not paying
Oh,
attention.
for sure. For sure.
Yeah.
Now, another one that I think is not as noticeable because it doesn't happen throughout the entire life cycle of a client is poor onboarding. Like if you
Mhm.
don't onboard well and you don't have a good process for onboarding, it can cost you a ton of money up front
Yeah.
and eat into that profit margin going forward because you didn't onboard well. So I think onboarding up front is extremely important, even if it costs you a little bit more, which it probably will, because you have to get them to your standard, right? But it's important to get them to that standard. Otherwise, you're going to have all these exceptions that are going to happen, and exceptions eat into margin.
We just started doing this, honestly, is we started adding onboarding fees to every new customer who comes in the door. Like it's a set fee. It might go up and down just a little bit based on the number of computers I have,
Mm-hmm.
but it's a pretty set fee. And we don't start billing until onboarding is done. So onboarding is that fee. And then after that, we go into the monthly maintenance. But I know a lot of people who do not charge onboarding fees. And to your point, like a bad onboarding process will make your company take more time to get your new
Yeah.
client onboarded with you. If you're not charging for that time, you're eating that time.
Yeah. And my personal opinion on this, by the way, is time and materials until they're up to the standard level of service. Um, an onboarding fee is a good way to cap it for them and
Mhm.
make it look less risky for them,
Yeah.
but I think before you have a signed quote, signed purchase order, whatever you want to call it, signed contract, you're never going to know the full extent of what you're getting into unless you spend a lot of time and money up front discovering that before you ever do the
It's
contract.
funny because we actually send like an onboarding form out to customers and we always go like, do the best you can. And like, there's a bunch of questions on there. Like, what's your network like? What kind of printers do you have? You know, give us your list of employees. So we know everyone's names. And there's like, I don't know, 10, 15, 20 questions on there. We always get back like the list of employees and everything else is like unknown, unknown, unknown. I'm like, how do you not know any of this stuff? They're like, our old IT company took care of it. And they're gone. And I was like, okay, so we have to spend more time figuring it out to like undo your, you know. So yeah, onboarding is a big one. I'm hesitant to say that to talk about letting bad clients or clients that don't fit your ICP stay. The reason I'm hesitant to talk about that one is because I personally, and trust me, I know I'm a complete psychopath what I'm about to say. I personally love dealing with troublesome clients. Like clients that no one else wants to deal with,
Yeah.
because I have a way of just like getting them in line.
Yeah.
And my staff hates me for this because like we took on a client a couple years ago and they were a royal PETA in the very beginning. And my clients,
Yes.
my staff were like, why do we work with these guys? Like, get rid of them. And I was like, no, let me handle them. And I
Yeah.
did. And they're fine now. They're a
Well,
great
and
client now.
it's so funny because when I had my MSP, I was the same way, right? I had clients that nobody else would deal with.
Yeah.
Now, did I budge on price? No.
No.
But did I do what they asked? Yes.
Yeah.
But I was charging them enough to make up for it. And I stood my ground on some things that, I just wasn't willing to budge on because,
Would you, if you had your MSP now, would you charge more than your normal rate for a client once you knew they were going to be a PETA?
I would slowly creep up their price. And if I knew it in advance, I just wouldn't give them discounts. Because remember, under my method of discounting, I'm automatically making 25% more than my expected profit margin.
Right. I would go so far as to like add an extra 25 or $50
Yeah.
on top of that. Plus, POE plus. They need a better name. Pricing plus for a client. If I'm talking to them and they're like, our CEO wants 24, they want 25 by 8 service. That's not even a thing, but sure, it's going to cost you more.
Oh, but
like
they
that
think it
level.
is.
They think it is, yeah. So I would charge more for that. But there are definitely bad clients who, and that comes back to your map them, right? If you're figuring out that a client is, when you do your math, hours divided by money, if you're not making that hourly amount that you need and they're not willing to increase their budget with you, that's a time you have to let them go. So It's not that they're a bad fit from a personality standpoint. They're a bad fit from a dollars standpoint.
Correct. And you have minimums that you have to abide by, or you are not going to hit your targets.
Right.
That's what a lot of people kind of complain about vendors, right? In our space.
Never.
Yeah, I know. But these vendors have targets. They have people that they're responsible for, and you should have the same type of targets in your business. And once you do, you start understanding the vendor side a whole lot more.
We just don't feel for them. We understand it, but we just don't feel for them. It's fine. Look, I think at the end of the day, we've kind of hit down on this one, which is that when you're setting your pricing, like you're not setting a price, you're setting a value. You're setting a number that will make you as the entrepreneur, the owner of the MSP, money, profit, extra cash, so that way you can do things like grow your business, hire another person, look at possibly mergers and acquisitions, go to more conferences to up your skills so you can get newer clients that you can that would spend more with you. You have to set that value prop at a number that allows you the lifestyle that you want to have.
Yeah. Somebody described it to me once this way. They said, revenue feeds ego, margin feeds freedom. And I think that's totally true and exactly what you just said.
Can't say it any better than that. So we'll end there. I hope you learned something. And if you did, check us out at facebook.com/group/all things MSP and let us know. YouTube glory. Check out these new lights I got. I have to figure out how to get the wiring to stay in place because none of the tape I have works. But if you have an idea for me and you can see what it looks like, youtube.com/@allthingsmsp. Follow us on all your favorite podcasting tools. Craig, I want to see another reaction video. Like, subscribe, ring the bell. Eric, last words?
Just that this is really important. I think if there's probably one thing that's most important to the health of your business, and probably that translates to your health as an MSP owner or even just a manager, is the more profit you have, the easier you're going to be able to sleep at night, because you know you have the money to take care of the things that go bump in the night, or like today on Friday the 13th.
Yeah, but when they listen to this, it's going to be Tuesday. That's Eric. I'm Justin. Bye!
Thank you for listening or watching the All Things MSP podcast. If you liked this episode, go ahead and give us a thumbs up, hit that like button, and consider subscribing to catch all our weekly episodes. And from your host extraordinaire, Justin Esgar, and myself, Eric Anthony, your humble producer and All Things MSP founder, thank you very much for spending your time with us. If you are not aware, All Things MSP started as a Facebook group and now supports over 6,000 members. We also have a LinkedIn page for those of you who don't do Facebook, and make sure to check out our YouTube channel for even more content. And a big thank you to our premier sponsors, Easy DMark, Helped, Goes Into, MoveBot, and Nodeware. And thank you to the rest of our sponsors. Without sponsors, we could not do what we do for the MSP community. Please consider checking them out. The All Things MSP podcast is a BizPow LLC production. The views and opinions of the hosts and guests are their own and do not reflect the thoughts and opinions of any employer, vendor, sponsor, or random taxi driver in the Metro DC area. Be sure to join us next week for another exciting episode.